start here. Bad news for South Africans with debt. The Reserve Bank has increased the repo rate. That's the rate at which the central bank lends money to commercial banks so they can give it to you and I by 50 basis points to 8.25%.
That also means, of course, prime jumps as well to 11.75%.
The MPC decided to increase the repurchase rate by 50 basis points to 8.25% per year with effect from the 26th of May 2023. The decision was unanimous.
Tertia Jacobs is a Treasury economist at Investec. Tertia, good afternoon to you, and thank you for your time on the Pulse tonight. A 50 basis points hike on top of all of the other hikes. What impact is this going to have on our economy?
Hi, good evening, Stephen. Yes, the cumulative interest rate hikes are now like 475 basis point rate hike. So the Reserve Bank also noted that monetary policy is now in restrictive territory, so it will be felt by households.
The governor describing this as restrictive, what does he mean by that? Why is that such an important word in this context?
I think what it basically means is that, monetary policy or the level of interest rates will start having a much bigger impact on consumer spending. And the focus is basically then where your demand in excess of your supply is basically in line. So, the concern is always that with higher input costs, companies can pass these higher costs onto consumers, which will drive inflation higher. So with tightening monetary policy into restrictive territory, that makes it more difficult for households to continue buying at firmer levels, and the ability of companies to pass on these high input costs.
The rand seems to have lost value against the dollar since this announcement just sort of 2 hours ago now. Normally, as I understand it, when interest rates go up, the currency strengthens. Why hasn't that happened this time?
So, Stephen, this is a very important issue because I heard in the intro that Thembekile said that the rate hike actually sparked the sell-off in the rand. So the dynamic of this interest rate hike is that the ZAR started to weaken from mid-May when the U.S. Embassy flagged the Lady R dynamic, which I will not elaborate on, right? So since then, in conjunction with the deterioration and intensification of load shedding, concerned about stage 8 load shedding, and very little active response from the government in the face of various crises that's facing South Africa, the country risk premium has gone up. That country risk premium is reflected in South Africa's ZAR, so that's one of the reasons then why it is depreciating, and also the level at which the government debt is trading. There's also been a massive sell-off. For example, the 10-year bond yield is trading at 10. So investors need significantly more compensation to be exposed to the SA government. So that in turn is what's driving the rand weaker, because the rand now has decoupled from many currencies in the rest of the world. In fact, the ZAR is underperforming, and that tells you that it's SA-specific factors that are behind this. So now to the next question. The Reserve Bank then looks at the rand and the impact of where it's trading now on the inflation outlook. So the inflation outlook has deteriorated because, the price of imported goods will increase. At some point in time, we're going to get another fuel price increase. So their hand has actually been forced by what's happening in the local economy, which I've just discussed the driving factors of.
Okay, all right, I think I'm with you. I mean, Tertia, it always comes back to the same thing, doesn't it? It's always about load shedding, and that's really the big factor here, and it affects everything. It's affecting the decision today, it's affecting the currency, it's affecting food prices.
Exactly. So we need an urgent response. At the moment, there's a high level of uncertainty about the direction of policy. So, the government can be more urgent in the way that it approaches this crisis that we are in. And then added to the load shedding crisis, we also have the crisis at Transnet and logistics, in terms of getting our export volumes, on the rails because our infrastructure roads are being destroyed. There's issues at the port. exports, and it also impacts what we import, getting our goods into South Africa. So we really need more urgency. We need more government intervention. And that's not what we're seeing, and that's why the uncertainty is so high. We need stronger leadership.
There's so many different elements to all of this. I mean, the problems with load shedding, huge problems, of course, with Russia's invasion of Ukraine as well. That seems to be a big factor. Several times the governors seem to indicate that our currency and our economy are more vulnerable to shocks. In other words, we're living in a time that's very difficult for central bankers, not just here, but in other countries too. And our inflation is still lower than many other places.
That is very true. So, when you look at America and Europe, and the UK, they've been forced to hike interest rates more aggressively, yet inflation remains very sticky. In fact, food inflation around the world remains very high. Like in the UK, I think it's around about 20%. In Sweden, it's running about 17%. So that is not just related to South Africa, right? So in this kind of environment, with the central banks remaining focused on inflation, it's even possible for American interest rates, for UK interest rates to continue to increase. So at the margin, the economic environment, economic fundamentals are more vulnerable. And in that context, geopolitical risks, the US-China tensions, all of that is also feeding into this high level of uncertainty that the world is actually facing.
Tertia Jacobs, thank you. Treasury economist at Investec. Do appreciate the time tonight.